Stop scrolling. If you run a company, this week isn't just busy, it's the year's most important week yet. Enterprise AI didn't just grow this quarter. It exploded 183% in a single week, jumping from 6 tracked stories to 17 overnight. We're witnessing a shift from hype to hard reality. In the next few minutes, we'll break down exactly why enterprise adoption is accelerating faster than any sector in history, what the new $195 billion annual increase means for your bottom line, and why the biggest players are suddenly terrified to look away from this trend. Picture a typical Tuesday last week. The chatter about artificial intelligence was all about consumer apps, chatbots, image generators, the usual buzzword bingo. But then something shifted. Suddenly, the headlines stopped talking about side hustles and started screaming about corporate survival. We are seeing an 183% surge in stories specifically tracking enterprise AI adoption right now. This isn't a seasonal bump, it's a structural pivot. Why? Because the narrative finally changed from, "Can this save money?" to "This is our only way forward." Think of it like the dot-com era, but with actual ROI projections instead of promises of moonshots. Every week, the volume of coverage regarding enterprise use cases has nearly tripled. This surge indicates that decision makers at Fortune 500 companies have crossed a threshold where they can no longer afford to ignore these technologies. The focus is shifting from experimental labs to production floors. You see this in stories about manufacturing plants optimizing supply chains with predictive models, healthcare systems reducing wait times through automated triage, and retail giants predicting inventory needs down to the shelf level before a single item is scanned. This week alone, we're seeing 179 tracked stories compared to last week's meager numbers, signaling that the industry is finally waking up to the scale of opportunity available to them today. Let's talk about what's actually driving this surge in interest and spending. The global AI market isn't just growing, it's accelerating at a breakneck pace, currently valued around $391 billion. That figure represents an increase of roughly $195 billion since last year alone, fueled by the practical deployment of these tools across diverse industries. It's no longer about theoretical frameworks or academic papers. It's about shipping cars that drive themselves and content creators who generate assets for brands worldwide. The McKinsey Global Survey on AI from late 2025 highlights a clear trend. Real value is being extracted, not just talked about. When you look at the data, the gap between promise and performance has narrowed significantly in enterprise settings. Companies that hesitated last quarter are now rushing to onboard solutions because the competitive landscape demands it. If your competitor is using AI to automate a department while you're still debating the ethics of it, the market won't wait for your committee meetings. This 183% week-over-week story volume reflects that urgency. It's the digital equivalent of a company suddenly finding out their supply chain is broken and scrambling to fix it immediately. The momentum is undeniable, and silence in this arena is now considered a liability. What makes this week particularly interesting is the nature of the stories themselves. We are seeing a massive migration from flashy DMOS to gritty operational implementations. In previous cycles, enterprise AI was often marred by promises that never materialized, systems that promised to cut costs but ended up costing more in implementation fees and maintenance. That cycle is changing now. The narrative has shifted toward practical use cases, as seen in the latest market analysis reports. This means we are seeing fewer articles about how AI will change everything, and more about how AI fixed a specific bottleneck. You're looking at stories detailing how enterprise software is integrating directly with legacy systems, handling complex data integration challenges that previously made deployment impossible. The focus on enterprise has also meant a rise in specialized workforce development. Companies aren't just buying software anymore. They are hiring or training teams specifically for these new architectures. There's also a counterargument often heard, that AI might saturate the market soon and prices will drop. While true to an extent, the current data suggests otherwise. The demand is outpacing supply in critical enterprise sectors, driving up investment rather than deflating it. We are seeing a buy now mentality replace the wait for better deals approach. This week's surge suggests that the infrastructure required to support this growth, servers, power grids, specialized talent, is becoming the new bottleneck, not the software itself. So, what does a 183% spike in enterprise AI coverage actually mean for you? It means the window of early adopter advantage is closing rapidly into a first-mover necessity. If your organization hasn't started integrating these tools into core workflows, you are effectively running at full speed while your competitors are already using AI to run faster. The practical takeaway is simple. Stop waiting for a perfect strategy document or an all-hands meeting about the future of work. The market has decided the future is here, and it's happening now. Look at how enterprise software vendors are pivoting their sales pitches. They're no longer selling innovation, but efficiency gains, risk mitigation, and revenue protection. These are tangible metrics that CFOs and COOs can defend in boardrooms. Don't get caught looking back while the market runs ahead. The data shows a trajectory toward an $1.81 trillion market by 2030, but we are only at the beginning of this specific wave of aggressive enterprise adoption. The companies that will thrive in the next decade aren't those that figured out how to use AI best. They're the ones who stopped worrying about whether to use it and started focusing on how much they can leverage it immediately. The numbers don't lie. Enterprise AI is surging, the market is shifting, and the pace is unprecedented. Whether you are a CEO, an investor, or just trying to stay ahead of the curve, ignoring this trend is no longer an option. The $195 billion increase in market value and the 183% story volume surge indicate a new normal where AI isn't optional. It's essential infrastructure. Don't wait for someone else to tell you what to do. Start exploring how your own operations can integrate these tools today. Subscribe for more deep dives into the trends shaping our world. Hit that like button if you're ready to evolve with us, and leave a comment telling me which industry you think is next to fully embrace this transformation.